Having accessible cash for emergencies and basic living expenses is the crucial first step for anyone wanting to take control of their financial situation. It is the foundation of a solid plan to place you on the path to financial freedom. As an investment advisor, it is my job to make sure that my clients have this need met prior to pursuing longer-term investment goals. Keeping cash on hand is valid for being prepared for emergencies like medical bills or car repairs, so you don't have to rely on credit cards, or so you don't have to sell your investments at a bad time. Liquid cash also allows us to take advantage of buying opportunities in the stock market, such as the dip that we recently experienced in the first quarter of 2025, where the market was down almost 21% at one point. Other reasons for holding cash are savings for a down payment for a home or saving for a vacation. So holding cash is about staying flexible and being prepared. So allow me to pose a question. Ideally, what do you want from an investment product that holds your cash position? Firstly, you want your cash to be safe. That's the entire purpose of holding cash, to keep it safe until such time that it is needed. Secondly, you would like to have an interest rate that is somewhat reasonable and definitely higher than bank savings accounts, for example. And thirdly, you want to have access to your funds in short order. This rules out investments such as CDs or any other product where there is a time commitment. The investment that meets all three of these needs is US Treasury bonds. US Treasuries are the safest investment in the world. US Treasury bond yields are much greater than bank checking accounts. The current yield for the 1 month Treasury is approximately 4.3%. US Treasuries are readily accessible in that they can be bought and sold just like stocks. Now, there is a convenient way to place your short-term cash in US Treasury bonds without having to determine how and where to buy and sell them. This can be done easily through exchange-traded funds, or ETFs. An ETF is an investment fund that holds a collection of assets, such as stocks or bonds, that can be bought and sold like a stock. There are numerous ETFs that invest their funds into US Treasuries, sold through different brokerages and different money managers. There are ETFs that present variations of the criteria that we've just recently discussed. I'm going to present one ETF that meets these criteria ideally. I want to make it clear that I am not a sponsor of this particular ETF that we're going to discuss or any other investment product. I do not receive any funds or any benefit from discussing any specific stock, ETF, mutual fund, or any other investment product. The ETF that I'm referring to is the Schwab US Treasury Money Fund Investor Shares. The symbol is SNSXX. For the investor holding on to cash, looking for the right combination of safety, return, and accessibility, this particular money fund offers significant advantages. This ETF offers exceptional safety because the funds are invested exclusively in U.S. Treasury securities, which are backed by the U.S. government. The current yield for this ETF in particular is approximately 4%, which is quite a bit better than a typical bank checking account. SNSXX offers a sustained stable value. In other words, no price fluctuation. The price, like most money market funds, is designed to remain at a net asset value of $1 per share. For short-term savings, you want to be able to get your money when you need it the most. This ETF can be bought today and sold tomorrow if the need arises. So it's very liquid, very accessible. Additionally, there are no transaction fees, no sales loads, no redemption fees when purchased through Schwab, so they keep their expenses very low with this ETF. It's also managed by a professional, experienced team, providing ongoing research and risk management. Another appealing characteristic is there is no minimum investment. Unlike many bank CDs or high-yield savings accounts, which have a specific minimum that needs to be invested. Now, the interest is distributed monthly. It's calculated on an annual basis, but distributed monthly. There are also tax advantages. Distributions are considered dividends, not interest payments, even though the underlying income originates from an interest-bearing asset. Dividends are generally exempt from state and local taxes, and dividends are taxed federally at lower rates than interest payments. So these features make this fund particularly appealing for conservative investors seeking a combination of safety, liquidity, a modest income, and the added benefit of state tax exemption. It's important to understand that the 4% yield is based on the interest payments of US Treasuries, meaning that when the Federal Reserve begins reducing interest rates, and ultimately they will, it's projected that later this year that they should begin lowering the rates, then the interest payments on Treasuries will decrease, and therefore the interest rate on this particular ETF will yield a lesser amount. But interest rates on bank savings accounts and CDs will also decrease. One possible negative for some investors for this ETF is that it is not FDI. It is not FDI insured. If an investor holds shares in the Schwab US Treasury Money Fund, the underlying US Treasuries securities are not on Schwab's balance sheet, and they remain protected even if Schwab were to face bankruptcy. And here's how that works. This ETF's treasury holdings are not owned by Schwab. They are owned by the shareholders. These assets are legally segregated and held at third-party custodians, like the Depository Trust Company or the Bank of New York, for example. This is a legal requirement through federal regulations and SEC rules. Schwab acts only as the fund's manager, earning expenses for administration, which is currently about 0.43% per year for these expenses. Schwab cannot use the fund's assets for his own operations. In the unlikely event of Schwab's insolvency, the fund's treasury securities are shielded from Schwab's creditors, or any creditors. They remain the property of the ETF shareholders, and they would either be transferred to another manager or they would be liquidated to return the cash to the investors in the fund. So this ETF's fund structure ensures that even during a potential insolvency situation, the risk of loss would be extremely low. And that is because the funds invest exclusively in short-term US Treasuries. And so these short-term treasuries would mature within weeks, minimizing the interest rate risk. Also, if the treasuries had to be liquidated, the cost for this would likely be very small due to the short duration and the high liquidity of the holdings, the US Treasuries. So in summary, this ETF's bonds are insulated from Schwab's financial health due to strict regulatory segregation and third-party custody. The primary risk is a minimal market loss from forced liquidation, not insolvency. For this reason and the previously detailed advantages, the Schwab SNSXX ETF is an exceptional place to keep your spare cash. Now, periodically I see presentations online speculating about what would happen if Schwab or Fidelity or Vanguard went broke. This type of video implies that these events are likely, and they spread fear and they spread disinformation. As we all know, anything can happen in the financial world, such as the 2008 financial crisis, where some banks and brokers did go bankrupt. But just remember, in that case, and it was an extreme case, there were many banks and brokerages that weathered that storm, including Schwab. This fund is not the only ETF that offers this type of investment, and Schwab is not the only viable and safe brokerage firm. There are numerous firms that offer these types of products, and other money market funds within Schwab are offered with similar types of ETFs offering variations on the same strategy that we're discussing. They can change around the type of bonds, the bond maturity, and how and when the dividends are delivered. And I want to be clear that I do place some of my cash into this ETF, as well as some of the cash of my clients. I also use other investment products to hold cash. But until further research proves otherwise, this is the product that I'm the most comfortable with, and I have immense confidence in. Many people are not familiar with these types of investment products. So understanding your options can make a real difference in your financial security. Now, I hope this information empowers you to make smarter choices with your cash and helps you feel more confident as you move on your financial journey. Until next time.